Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. As always, we need to go over some important housekeeping details about the session, and then I'll introduce Rob. First and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it now if you like, but that's the main point to take away. I'm pretty sure most of us out there are familiar with the Q&A process here. Whoops, went a little fast there apparently. And in case we're not, for any of those who might be joining us for the first time or are relatively new, the process is displayed on the screen for you. We don't have any time for voice questions in this session, but certainly feel free to ask your questions in the Q&A, and we will get through as many as we can, knowing that it is going to be a limited portion for the Q&A, and we will for sure not be able to get to all questions. So if we don't get to your question, just know it has nothing to do with the validity. We just only have so much time, and take that as encouragement to attend the insiders meeting where there's a 45-minute Q&A portion. So, all right, that wraps up all the housekeeping details per usual. Today was an amazing day, and Rob's price target was hit today, and the projection was given 7 months ago. I mean, get that, 7 months ago, and it was hit today. So I can't wait to hear his thoughts on where we go from here. And of course, I'm very excited to interact with you all as usual. So thank you for joining us for this live session. At this moment in time, I'll introduce the man of the hour, Mr. Rob Roy. How are you tonight, Rob?
Great, Zach. How are you?
Doing well. Doing well. Happy Tuesday.
Introduction. Happy Tuesday to you as well. Yeah, it is a pretty interesting day. And there's the video. And as you said, the price target that we talked about way back was actually hit today. So what I want everybody to do, oh, by the way, welcome to TradeFinder. And those of you on the various social media platforms, welcome to you as well. And that's not my forte. I know there's a lot of different ways to view, but wherever you are, thanks for being with us, because this is a great day, not for me, but for Elliott Wave. Not a good day for the Elliott Wave haters. And so here's what I'm talking about. I want you to pay attention to where the closing price was today, 436.66. All right, so let's take a look at this zigzag pattern that we talked about, as Zach said, 7 months ago. And there's the price target. And I can actually drag this over for you. And where was that projection? 436.66 to the number today. And for those of you that are saying, oh yeah, it's easy to go back and show that now. No. In the words of the Kimbe Montundo, you can go back and look at this. This is the recording that we did on the US market update going back 7 months, where we talked about this new zigzag pattern that was moving to the upside. There it is right there in the headline. 7 months ago, we talked about this price target being hit in a zigzag pattern, and there it is to the number hit today. And a lot of you have been making comments on the YouTube videos of I didn't believe it, and he's been talking about the market going higher and all this kind of stuff. I appreciate all the positive comments because, as you know, there's haters out there. But for those of you that have been following along, I do appreciate the positive comments. To the number, I mean, that's pretty amazing that we hit it spot on. So I'm sure the question is, where do we go from here? Well, that's the big question, right? So if we look at the 10-day moving average, you can see that we are a bit overbought short term, at least on where we can go from here. So what would be a potential shorter term? We can look at the extension here of this wave 3, potentially up to this wave 5 target, but I don't know if we go quite that high. Here's the zigzag that we have located within the wave 3, and it shows not much higher from here. So we've got two levels here, these two zigzag patterns. We're colliding right against them and being a little bit overbought. And what happens tomorrow? So we have Fed Day tomorrow, and what are they going to say? What's that going to do to this market rally, which we all know? So let's be talking in real numbers here. The equal weighted S&P is up 3% for the year. 3%. If you take out the 7 performing stocks, that's pretty much where we are. So you equal weight all the stocks in there, you're up 3%. But when you include in the SPY those 7 stocks that have been driving the market, then we're up over 20%. And so that's the real market. Really, the market has done absolutely nothing this year. So it's just a few stocks that have been carrying this index, the market weighted index. So I think that's where we talk about this cautious optimism that I've been saying for a very long time. And markets move up, markets move down. When they move to the downside here, I did say, maybe we're moving from the cautious optimism to just being cautious, but never have I been bearish. And some of you said that he's going to be bearish all time high. Man, never been bearish. Here's the numbers. You can see, you can go back and watch that recording of where we've been. But we're at this target now, and this is where we have to say, all right, can we move to the next level from here? Well, the Elliott Wave algorithm, for some reason, likes this level up around 450. So we could get there, but we have some headwinds ahead with those two zigzag C wave targets. The zigzag is my favorite of all Elliott Wave patterns. Technically, it's a corrective pattern, but you can use it from a directional standpoint. And that's why I think you need to really be in tune with Elliott Wave. If you're new to Elliott Wave, our website, ewotrader.com, we have an alert service. If you're wondering, what are you going to do from here? Where do you go from here? Well, go to our website and join us. We'd love to have you. And we talk in depth with a lot of education on where we can go from here. So ewotrader.com will help you moving forward on where the market can move from here. But yeah, it's pretty amazing to see that number hit just dead spot on. All right, so that's the S&P, a little bit overbought. We have the Fed announcement tomorrow, a little bit of a gap up today. We've got a little FOMO going on, I think, here because of this vertical move. You know, I don't like that. I don't like it when things go vertically either direction. So perhaps a little bit of a pause. We'll see what the Fed has to say tomorrow. Are they going to pause? Are they going to raise again? Are they going to pause and then say that they may raise again one more time? Who knows? I don't think another 25 basis points, whether they do it tomorrow or say they may do it in July. I don't think any of that matters right now. This is where we are, and we're a little bit overbought. We'll see how that plays out. If we move to the upside from here, I'd be really suspect of that move, because when you break a major moving average, which the C wave target is a major level, in my opinion, especially when it's 100% fib extension. You break above here, I don't have confidence that that will hold. But we're here, and we'll see where things go from this point based on what happens tomorrow, and then we'll move on from there. Let's take a look at the bond market and look at this move in interest rates to the upside. There's a lot of conversation about how China may revalue their yuan and what effects that could have. That could create a lot of volatility in the market if they do that. Last time they did it, it created a lot. It's been a long time since they have, so we'll see what happens there. I've talked about this before. We're still in a technically qualified 5-wave to the downside pattern, but we're right at that last fib level. And if you read the actual writings and works of Elliott, other than just the algorithm, he didn't like it when the wave 4 moved past 70%. He didn't trust that, even though he admitted that 78.6 is a fib level and we could go there. And with this move to the upside in rates, depending on what the Fed says tomorrow, could have an effect on that. So perhaps we move back down tomorrow, or maybe we break that and completely disqualify this 5-wave pattern. Without getting into a whole lot of detail, every Thursday night we do an insiders meeting for our alert subscribers. We'll talk about what could happen with the potential of China and the bond market, et cetera, with rates. We're over 80% now on the spread between the 2s and 10s. A lot of people are discounting that we're not going to go into a recession. There's just no way I'm going to go there. I still think we move into a recession. Yes, there is a lot of AI mania, and this just seems so eerily familiar to me of going back to 1999 and 2000 with the dot-com era. I made a ton of money in 1999 and 2000 on my own in that area, and then we had the crash. And I gave over 50% of it back in an even shorter period of time than I made that money. And so I'm just not going to do that. I'm not going to make that same mistake again. So still cautious. We'll watch those stocks that have been rocketing to the upside, but this feels eerily familiar to that time frame. And people have been asking all the time, how far can this AI thing go? I say I think it'll play out a little longer than you think. NVIDIA moved back to the upside today. Perhaps that'll be a question in the Q&A at the end. So things will get stretched and overbought. But then where do we go from that point in time? Then we look at the dollar, and you can see we are no longer in a 5-wave pattern. We're coming back down a little bit. We raised the debt limit. How can that be a positive for the dollar? It doesn't seem like it has been. But until the dollar breaks down here below 101, I wouldn't be concerned. In fact, the dollar is the viewed as the default currency, if you will. And I think money will continue to move there. If we do move into a recession and it affects the global markets, then where are you going to go other than the US dollar? So I think the dollar is pretty stable. We're in that range. We have to break way down below 96 before that becomes concerning to me. So far, the dollar is fine. In my opinion, I'm a little bit more concerned about this rise in rates and what happens tomorrow with the Fed meeting. It looks like a little bit of short covering going on here, perhaps. But we'll see what happens when the Fed makes their announcement tomorrow. So pretty interesting what's going on there. Looking at the rest of the markets, if we look at the DIA, as you know, it's been between 330 and 340 for quite some time. Look at that. We broke above 340, a gap up in the Dow that has continued to the upside. We put the moving averages on here, and we're a little bit overbought here on the DIA as well. So can we continue that move? Perhaps we can. It looks like the algorithm for Elliott Wave is giving us a little bit of a higher target. And again, this is the best Elliott Wave software that I'm aware of. If you're new to it, it's from hub.com, HUBB.com. You can go there and find out more about it. I've tried all the Elliott Wave softwares that I know, but this is programmed directly to the algorithm as Ralph Nelson Elliott wrote it. There's a lot of other programs out there that have personal adaptations of it. But if you don't know what those adaptations are, it's a little hard to read it. But for this, we can see we're at the wave 3. So we now have, which we haven't had for quite some time, an Elliott Wave pattern in the DIA. So we've labeled into a wave 3 to the upside, and we have those recent highs just at the bottom end of that tap box there, which stands for time and price projection. So perhaps we can go a little bit higher from here. You know, if the Fed pauses tomorrow, maybe we get a bit of a relief rally tomorrow, which I do think gets things a little bit overextended. But interesting that we do have this relabeling of the DIA. And if we take a look at the zigzag pattern, look at where that B wave correction is, right at the 61.8% level. You can see the C wave extension is right smack in that tap box. So perhaps there's a little bit more to the upside here. As I said, usually this kind of stuff goes a little bit longer than you would think, but be really careful here. Pick your spots. It feels a little bit like a setup here on the moves to the upside. We've got a lot of chatter going on that seems familiar to the meme mania going back to 2020 and 21 with some of these stocks. So just, you know, trade what the charts are telling you, but do it with caution. Don't do it with just blind abandon. And that's what we've been doing. We've been very selective on directional trades at EWOtrader.com. Let's look at the Qs. I'm sure everybody's anxious to see, well, what are we saying about the Qs? Because that's where the action has been. And you can see Doji today in this wave 3. There's that slight vertical move here. I liked this part of the move a whole lot better. I like the 45-degree angle. I don't like it when things go a bit vertical. So we're a bit overbought from the 10-day moving average. We have a doji. And what is that signaling as far as what the Fed tells us tomorrow? But a little bit overbought, and at some point, a wave 3 does correct into the wave 4, and that's the challenge there. When does this wave 4 begin? So this projection here is not telling you the wave 4 is going to start. It's telling you if the wave 4 starts, that's a potential target. So we've got a hammer doji here, and you know, if we could move to the upside from that doji, or we could move to the downside. I just don't like this vertical move that's occurred, and it's all AI chatter based, and money's just being thrown at any of these stocks to say anything about AI. You've seen it, you're aware of it. But I don't like this vertical part of the move from 340, but it isn't a wave 3. We'll see if it can continue. Tomorrow's going to tell us a lot about where the Fed is and what they say from here. Looking at the IWM, for those of you that think small caps give you a good risk on, risk off type of idea, you can see that we have broken out of that trading range where it was really tight from 170 to 180. But if you've been following us for quite some time, you know that the bigger range has been 170 to 190. That's going back over a year or so. And we're getting awfully close to that level. Once again, a bit overbought from the 10-day moving average. So we're nearing a point of major resistance. And, you know, this is longer term resistance. That short term area at 180 broke up. So there is an appetite for risk here. Is it warranted? Well, if we can consolidate here somewhere, this would be my argument. I would hate to see the IWM, if you're long, break above 190 right away, because we're already a little bit overbought. What would be better is if we consolidate below 190, allow the 10-day moving average to catch up, and then break above 190. That has a much better chance of holding. Does that happen tomorrow, or do we just go sideways a bit here? So we'll see if we can break above 190. If so, then I think we are in a good old risk-on environment, and perhaps then you go much harder to the long side. But until we get there, it's all speculation right now. If we break above 190 and close above 190 tomorrow in an already overbought condition, once again, I don't think that holds. History says that those kind of moves don't hold, but there has been an appetite for risk here with the IWM. I think that's pretty interesting. Different story here. If you look at Bitcoin and the cryptos for a risk-on environment, and we've been talking about this for quite some time, this 27,000 level, and we've broken below it, and we're below the 10-day moving average. And you can see on the high, we tapped the 10-day moving average. I know everybody, it trades 24/7, but just like futures and other things. It gives us an end-of-day price. So when we're using software, they're showing end-of-day charts, which is what we're doing here. It does give us a print along those lines. So we're breaking down below 27,000, and I've been saying this for quite some time. Keep in the back of your mind that none of that vertical move from 20,000 to 27,000 had been retraced. Are we doing that now? Well, we tried back here in the beginning of June with no follow through. So we have to follow through that move to the downside, and we still haven't done that. We've broken below 27,000, but without follow through to the downside. So maybe we get a little bit more and then retrace some of this break between 20,000 and 27,000. I do think that if we consider the fact that the halving is the first quarter of next year, that's historically been spot on as far as big rallies in Bitcoin and the crypto. So it would be great if we could come down here. I would say somewhere in this 24,000 range. Maybe we don't get quite that far down. Maybe 25,000 is going to be the low. We're in that range now. We have been since the beginning of June. But if we could just come down here and test 24,000 and hold and break, I think that would be very constructive for Bitcoin and the currencies moving forward, especially with what history shows us on every time Bitcoin goes through one of these halving processes. But right now, you have to look at that. We're below 27,000. That didn't hold. We're below the 10-day moving average. The 10 days crossed below the 30-day. You're guessing if you're being very bullish right now. Wait. And if you're looking for an entry here, let it get back above 27,000 with follow through. Then you can look to go long the cryptos. And if we move down all the way, yeah, we may hold here at 25,000, but if we move down to 24,000, I'd feel a lot more comfortable if Bitcoin came down to 24,000, retrace some of this vertical move, and then bounce back to the upside. So if we hold 24 and then bounce up and break above 27,000, I think that's a pretty safe entry on Bitcoin. So right now, I think it's hands off on this. Let it make its move. Let's see what's going to happen with either 27,000 or 24,000 moving forward here. I think that's really important. If we take a look at the Aussie market, 23 and 22 have been the levels we've been talking about, and we are back almost to 23. We did hold 22, which needed to hold. You're going to love this, Zach, because if we had broken below 22, it would have been
Katie bar the door.
That's it. Katie bar the door, because then we're looking at perhaps coming all the way down to this wave 5 low back from October. But we don't have to worry about that right now because we held, we moved up, we traded above the 50-day moving average, haven't closed above there yet. But the key is at 22 that absolutely needed to hold did. But to go long, you do need it to get back above 23, I think. So I think you're watching here as well in the Aussie market. But if we can get above 23 with some follow through, then you can look to see perhaps we have a new impulse pattern starting. There's a lot of support there at 22. So it's not just the, fib level here of going back to the previous 4 at 22. There's a ton of support there, testing it in March and breaking to the upside, but being back down here. So we're in this range between 22 and 23. A break below 22 is pretty ugly with follow through. There's why. Both these two breaks below 22, neither one of them had follow through. There's a third one actually there, although that one didn't close below it. So if we break below it with follow through, yikes to the downside. But if we can get back above 23 with follow through, then maybe we're starting a new impulse pattern, because right now we're in a corrective pattern and this is a flat. So we've got a flat going on right here, which is a sideways pattern. So 22 and 23 are your levels there. Look at the friends up north. I don't know any of you are golf fans, but over the weekend, they had a Canadian win their Canadian Open. Hadn't happened in 69 years. The place went absolutely bonkers. So that was really cool to see. But from a trading standpoint, we're right at this 61.8% level here with a wave 4, but we're a bit overbought. The key is that we got above 110, which isn't a major point of support resistance, but there's some there, more or less trading through it, which is a little bit different than finding bottoms and tops at support resistance levels, trading through it. you just find a midpoint. So not as good of an indicator, I don't think, as when you have highs and lows at a potential price point. But once again, a bit above the 10-day moving average. So maybe a little bit of a pause here. However, when you're looking at the EWC, if we could break above 115 with follow through, you could go long the Canadian market as well. But so you can see we're overbought. So if it were to break above there tomorrow, can that hold? And that's where I would get a little concerned. I'd hate to see it close above 115 tomorrow, because we're just too overbought, and I would be suspect on whether that would hold or not. So 115 is a level you're watching on the EWC, and then the INDA, which has been really amazing. Look at that. Still amazing. Relabeled to a wave 3 to the upside. So those of you, and I know there's a lot of you that watch the Indian market, the wave 5 forecast here is up at 44, and look where that coincides. Those highs from back in November and December absolutely split that tap box. For those of you that are not as familiar with this, when you're in a wave 3 and we have these projections, there's a reason the algorithm has picked this 44 level for a wave 5 target. But the wave 3, until the wave 4 is actually confirmed, which it's not, we're in the wave 3, you can look for that wave 5 as a potential target for the end of the wave 3. So again, learning the ins and outs of Elliott Wave, very important. We have all that education on our website at ewotrader.com. And then here's where you see the zigzag pattern, and we've broken above the 100% extension of that first zigzag. And then there's a second one. Look where the 161.8% extension is, just dead on that midpoint. Exactly what we talked about. And then we have a complex C wave here, because there's another zigzag right here. And look where the extension level is there. Everything's showing potentially moving up to 44 on the INDA. If we get to 44, I think that's hands off at that point in time, because that'll be the highs from November. Where can we go from here? But we're a little bit overbought, not tremendously. It looks like we do want to head at some point in time to 44 on the INDA. Multiple Fibonacci and Elliott wave patterns giving you that exact price. So I don't think we're done on the INDA. So if you're long the INDA, I know you're a happy camper, and I don't think you're quite done yet, even if we get a little bit of a correction in the meantime. Hey,
Rob.
Yeah.
Sorry to cut you off there. I just wanted to go back to the EWC chart. You were on the IWC during that time.
I was?
Yes. I believe, unless I'm losing my mind, but
okay. Well, thank you for pointing that out, because that is a different chart. And so looking at the EWC, getting above 34 is kind of the same as what I was talking about on the other chart. We are above 34, which is key. And so the level would be 36, would be those all-time highs. Can we get there? And so we'll see if we can break above this 50-day move. I don't like that, another one of those dojis. This is the more of the gravestone dojis here, and that one's not quite as bullish. So can we break up and test those highs? But 34 is the key here. It has been. We do have a set of higher lows that's going through here. I guess I got too excited about the Canadian winning the Canadian PGA. I don't know if anybody watched that, but Nick Taylor won, and all the Canadian pros were out there. Adam Hadwin, who's another PGA Tour player from Canada, went running out on the green to congratulate him, and the security tackled him right on the green. They thought he was just a fan running out on the green. It was crazy. But anyway, so 34 is the key level to watch. Thanks for correcting me there, Zach. Appreciate that. But there's the trading range, 34 to 36. You break below 34 with follow through, even though we've had several bars below here, none of those were what we would look at for potential move lower. We did get down to 33 and that held. And then the next level would have been 32, but we didn't get there. And we're back above 34. So the key here will be, can we hold 34 and take a look at 36? So a little bit of difference there, but thanks for pointing that out. So let's go look at the EWG for Germany, and 28, 29 have been the ranges for quite some time. We're holding above 28, so there's a little bit of testing going on there, but we're below the 50-day moving average. We're above the 10, but below the 50, And 28 and 29 are still the levels here. They have been since going back to the beginning of this year. So we've been ping-ponging back and forth between those levels since the beginning of the year. If we can break below 28 with follow-through, we do have some support at 26, that wave 3 high from December and tested in the middle of March. So we could likely be moving down to there. But to go long, the German market right now, at least from the EWG standpoint, you would want to see a break above 29 with follow through. So right now we're just still at tight range between 28 and 29. Look at that. It's been an amazingly tight market. And there's one show that I watch on CNBC. Most of you know my story. Some of you have joked about, needing a new TV screen because my history of breaking one when the crazy things were happening. So I keep it on mute. But the one show I do like to watch is Fast Money. And they had a money manager on there that talked about last year was one of the worst years ever for money managers. And they're underperforming this year as well. And will there be some catch up? Are they going to chase this move? Will the money managers do it, or will they go harder to the short side? Nobody really knows how they're going to play that out, but they're in a year and a half of underperformance for money managers, and we'll see, whether or not the volume kicks in one way or the other here. So from that standpoint, whether we're looking at the EWG breaking above 29 or our market breaking above those C wave zigzag extensions, we'll have to wait and see how that plays out. I do want to share the VIX with you. Yesterday, very interesting day in the VIX. Most of you are used to having the VIX as a fear indicator, and the majority of the time when the market goes down, the VIX goes up, and when the market goes up, the VIX goes down. That's usually what happens, but it's not supposed to be that way. It's just what's worked out over time. It's supposed to be a volatility index. Yesterday, the VIX went up and the market went up yesterday. So you had the market up and the VIX up yesterday. So it was kind of more true to what it's supposed to be, a volatility indicator, because yesterday was a big up day. So volatility was to the upside and the VIX reflected that. So kind of interesting that it actually did what it was supposed to do rather than what has become known as over time as more of a fear indicator. And when the VIX gets really low, the expression, when the VIX is low, it's time to go. When the VIX is high, it's time to buy. They have all these little cute expressions in the world of the market. So yesterday it did what it's supposed to, but back down again today with a move to the upside. And again, the Fed meeting tomorrow. I don't think tomorrow's Fed meeting is that important as much as some of the few have been, unless they give us some insights onto where things are going to go. I think the more concern right now is that 210 yield spread getting back above 80%, hit 86%, then back down to 84. So it hits 100%. That's when we had the regional bank crisis before. Could that happen again if we get the spread there? But the yield curve is just simply not something I'm willing to discount. A lot of the chatter on the talking heads on the financial networks, explaining why it's different this time. I've heard that so many times over 27 years trading. It's never different this time, especially when you're talking about the bond market. So we've been cautiously optimistic, and I think that cautious word has to stay in there. It's really important because this is just not an all clear sign. We've had a number of stocks, a small number of stocks that have been driving everything because of the AI stuff. But other than that, it's been really rough. I told you the equal weighted S&P is only up 3% for the year, not the 20+% that the SPY has been up. So we tapped that 10-day moving average on the high yesterday and on the high today and back below it. So I think you have to keep an eye on this. It's in a wave 5 here. And so if we do hold this wave 5 and start to move back up in the VIX, does that spell the end of the rally? Maybe, but you did see that yesterday, it can actually do what it's supposed to do rather than just be this fear indicator that most people have come to know with the VIX. So I did want to kind of share that part with you. If we take a look at our website. I've been mentioning EWOTrader.com. We have an AI-based strategy because everything is AI right now. We were one of the first, I think, to have an AI-based trading strategy at EWOTrader.com. And it's designed for generating income from channeling-based, trading range-based stocks. You can see this is Beyond Meat. It had a big move to the downside. So there's your move lower there. And you can look at the chart and see this big move down. And the AI told us that, hey, we're likely to stay in a trading range. And we put this butterfly on. And we had a really nice return from this butterfly. And it looked like maybe we're coming off that support at 10. And perhaps we want to go ahead and take those gains. So right in this area here of 21 days, 21 to 28 days is the average length of these time strategy trades. So a little over 28% on an income-based strategy in 21 days is a pretty good return. And so every single one of our alerts that's sent out at EWOTrader.com has a page that looks exactly like this. It tells you the entry. We send you out alerts on that. We show you what the actual alert strategy is. And then we send you out alerts for the exits as well. And Beyond Meat at this point in time has continued to the upside. It's actually above 13 now, which means that had we not taken this exit when we did, had we waited longer, that butterfly would be out of the wings and that gain would have been gone. That's the difficulties in trading. When do you take profits? When do you take losses, etc.? So we timed this one really well. You don't always time them perfectly. This one was one of those that we timed extremely well. And then we look at our case study considerations, which is what we do with you each and every week here at TradeFinder, as we identify something that you may want to consider, and then you're kind of left on your own to figure out what strategy you want to do, when you want to get in, when you want to get out. So if you'd like some help with that, that's why you might consider becoming a subscriber at EWOTrader.com. Otherwise, join us here each week and we'll give you some opportunities and you can figure it out from there. So we looked at Eastman Chemical. This goes back to 418. This is that one that we've talked about where we had a pretty well-formed symmetrical triangle, and then it moved into a larger triangle. And now what we've morphed into is a big descending triangle. So sometimes they take longer than we like, and that's frustrating because where in these triangle patterns, we put on strangles where we buy a call and buy a put. So time decay becomes the enemy in those strategies. And sometimes it just simply takes longer for it to break out than we'd like. But on the other side, if you're patient through that and you're willing to stomach your account in the red for a little bit before it breaks out, normally you get rewarded for that because the breakouts become larger and potentially stronger. So we're testing this upper trend line here, and I'm going to show you a really good example here in a few minutes of one of our case study considerations here at TradeFinder on why the information that you may read out on the internet that a descending triangle means a downside breakout, an ascending triangle means an upside breakout. I know you've heard this multiple times if you've been with us before, but a lot of people are new and they haven't heard it. Symmetrical triangle can be a breakout either direction. I've done a tremendous amount of research over the years on triangles, and I can tell you there's no rhyme or reason. Either any of those three patterns can break either direction at any point in time. It looks like we want to break to the upside. We tried it. We tested it here a few days ago and came back down, found support, broke back to the upside. Maybe we're going to take off and move higher from here. Who knows? But just know that a descending triangle does not necessarily mean a downside breakout. At some point, this will move. And then rig, there was actually news on the financial networks today. We have a alert on this for our alert subscribers in our speculative portfolio, because this is a little bit different than we have an impulse, volatility, and time strategy portfolios. We also have a delta neutral portfolio, but we have a speculative portfolio when we identify things that we like, but they don't fall within the confined rules that we publish for those defined strategies. And that's where rig comes in. But if you looked at the rig count today, you can see we had a break here and then we came back down, but the rig count is going up. The amount they're charging per rig is going up. They're actually taking some old rusted rigs and refurbishing them because they view that they're going to be needed. And at some point in time, I think we're going to get a big move to the upside here. So our alert goes out to November. We're very patient here. We've had some nice gains that we haven't taken yet. We've had over 40% gain once right here on June 5th. So, you know, we're playing with the house's money, if you will, but we're willing to give this one a little bit more time. Again, it's a speculative one. It's not based on the defined rules that we have for our other strategies. And I feel like down the road, this is going to be a home run type trade. So we'll continue to update it week after week. But no, from our viewpoint, this one is well out into the future. And we'll see how that plays out over time. And then we've been talking about these two. Go back, and these were both done on May 9th. And here's MHO. And bam, look at that. If you haven't taken gain, you're getting greedy now. So that's a really nice gain that you would have had you been following this one. And then we had Lennar. That one did give us a little bit of a dip, but look where we are now. We're back to the upside. So higher than where we entered. So I'm going to cross these off. I'm not going to show these anymore because I feel like if you're still long these, you're probably getting greedy. So if you followed both of those, you've got a net gain. We talked about this. I would keep showing them, but now I'm going to cross them off. I'm not going to look at them anymore because you're look at where we are, 161.8% extension on the wave 5 here on Lennar. So that's really extended when you have a 38.2% wave 4 correction. And if interest rates continue to creep to the upside, eventually at some point in time, that's going to affect the housing market. You'll see what I mean when we talking about lows here in a minute. So I think you need to take those gains. Really small one here, but a really nice one on MHO. Take those gains if you haven't already. You're getting greedy if you haven't. So here's Dow. And this is one we have sent out as an alert because the spreads were tight and we're breaking to the upside here, breaking above the strike of the call. So the call option is actually in the money at this point in time. However, you know, there's been some time decay, so we want to see if it can move a little bit higher from here. If we look at the DMI, it's not really giving us an indication yet other than buyers stepped in today. But that ADX has to get above 20, and we want to give it an opportunity to do that. So we're going to hang in there a little bit longer with this one. But the call option that we sent out to our alert subscribers is now in the money. So that's good. We don't need much more of a movement to have a nice gain there. Emerson Electric, we looked at this, a big descending triangle here. As you can see, there's that huge descending triangle right there. And look at that. So here's what I'm talking about. There was that false breakout to the downside, and people ask the question all the time, well, if we break to the downside, don't we want to take those calls off? You don't do that until one of the options at least covers the risk in the trade. So that was a false breakout to the downside, and we've got a big move higher here on EMR, a really good indication of two rules that I've been sharing with you. One, don't be so fast to take one side of your triangle off. You don't know when you're going to get a head fake. There's a lot of head fakes in the market, and that's a descending triangle. And which way is it breaking? To the upside. So my point, and you know, there's no rhyme or reason to which way the triangles are going to break. Any of the triangles can break either direction, but a really nice move to the upside there. Let's see if we can give that one a little bit more time. And you can see, look what's happened here on the DMI. Good separation here. The buyers have really stepped in. The ADX is climbing. If it can get above that negative directional indicator and above 20, then I think we have more room to run here. So let's see how that plays out. Let's give it an opportunity to move a little bit higher. But really good indication of both those two things. Don't be so fast to take one leg off, and don't buy into this descending triangle to the downside, ascending triangle to the upside. And then check out lows. So what does this mean for the housing market? So you see lows because this is fix yourself, right? Bam! Is that telling us that maybe the housing, buying new houses are over? People are going to stay in their own homes and start fixing them up. That's a huge move to the upside. Once again, if you stay long this one, you're getting greedy. So we're going to take that one off as a really nice gain as well. But I think it's interesting with the housing stocks, you know, O for MI Homes, and then Lennar. Both of those looking like they're tired to the upside after nice runs. And then you get a stock like Lowe's, which makes a big volatile move to the upside. Seems like some people are thinking that we may be switching more to, we're going to stay where we are rather than go buy a new home type of thing. So that's a nice gain there. That was a really great breakout. So last week we looked at Primoris, and I told you, I put in my notes, watch the next close. Do we follow through? Because that was a bit extended. And we did. We had a higher close. And we're really pretty much at that point. So depending on where you may have entered, if you were following this, we're kind of at around that same spot, but we didn't give back this vertical move. And we look at the 10-day moving average here, and you can see we're consolidating, allowing the 10-day moving average to catch up. The wave 5, again, the algorithm likes something about that 32.5 price. Let's give it a chance to see if it goes there. So if you're following this one, I think I would stay and hold this. And then we also looked last week at CRL, Chris River Labs. We had a target of 110. That was our price target. Looking at that, because that's where the previous 4 was. And look where we went today. Bam. Where was the high? Well, the S&P hit 436.66, the exact 100% extension level on that C wave zigzag. Here we didn't quite hit it spot on. We were 209.07. Close enough. So I think you want to take that gain too. So we're going to take CRL off as a quick, not a great gain, but a nice 1 week gain there on CRL. So you can see we're closing some of these case studies off for really nice gains here. So we've had a pretty good run considering how difficult the market has been. And so, wow, what a day and what a week that we've had for our case study considerations, as well as that long time zigzag target. Again, I showed you when we first called it, the potential for that zigzag C wave extension, smacking it dead on the nose today. Took some time, but that's how markets work. Impulses and corrections. That's the crux of Elliott Wave. That's what we believe at Elliott Wave. Is the market moves in a pattern of impulses and corrections, but the point is, where are you going to wind up, right? It could be back and forth to get there. Things don't go vertically one way or the other. In fact, I don't like it when they go vertically one way or the other. So that's what I wanted to share with you tonight, Zach. I'm going to turn it back to you, and let's do some Q&A on a really fun day in the markets today.
Absolutely. Yeah, that sounds great. We got tons of great questions per usual. So let's get through as many as we can with the time remaining. So we are going to start out here with a request for Scourager. And that request is...
Not familiar with that symbol. Do you have did they give you the symbol on that? Or is that the name of the person asking the question? So...
yeah, that was the name of I don't know how I forgot this. That was the name of the username. It's just
okay. What's the symbol then?
It's for Target.
Okay. Well, everybody knows the political stuff that's been going on here with Target. They did have some fundamental things from all. I actually looked at this one because I think this could be a longer term position. Some of our alert subscribers like to look for longer term trades. They want to look for stuff that they can do leaps on. And I think Target could be one. They've fixed their inventory issues. They had way too much inventory. They fixed some of their margins. So they have better margins now. And then, of course, you had this big move to the downside from all the political stuff that's been going on. And even though it's a wave 3 to the downside, at some point in time, the wave 4 starts. I would like to see this break back above 130 with follow through. And then I think you may actually have a trade here. Now, whether or not that's sustained or not, because we're in a wave 3 to the downside, perhaps we get a bounce up to create that wave 4 somewhere around 150. Maybe we stop here at this level, at least for a short period of time at 140. But if we can get above 130, I think you have a trade there. Money will rotate at some point in time and look for stocks that have been beaten up. Some could argue that this has been unfairly beaten up. I don't know that the same stands for Anheuser-Busch. That one seems to be they're in a world of hurt right now, giving beer away. Basically, That's not where you want to be from a business model, but the fundamentals are different here on target. So let's see if it can get back above 130. And if it does, I do think you have a potential trade to the upside there. But 130 is the key. It's just testing it now. That wave 3 may not be done yet, but I think if you have a longer term horizon, you could take a nibble here if it gets back above 130.
Thanks, Rob. So yeah, that's definitely an interesting one to continue to watch. But John just wanted to confirm that there's no case study tonight.
Well, that's a really good question, isn't it? Yeah, we do need to look for one. I just saw the time and I wanted to get to the Q&A. So look at this. This is kind of blowing me away. This makes me real nervous here. Those of you who've been watching this for a very long time, those of you that have this software and also our alert subscribers at EWOTrader.com, you get my searches, and that's these here. And this impulse search is my directionally based search. And 20 results, I can never remember seeing a 2 handle there on the results. I don't remember it. We've had 10 is getting on the high end. I think one time we had 14 or something on a TradeFinder, but 20 results, I think that means you got to be really, really careful here. And so when you're looking at these, the first ones that I want to look at, Adobe. I know we've looked at Adobe, but gosh, that's had a nice run. I do want to look at the automotive stock there, because I think Adobe is just, I didn't like the vertical move here yesterday, and then we continued it today, and we've got this gap here. I just, that DMI looks very supportive of a continued move higher, but gosh, it's vertical, it's got a gap, and you look at the 10-day move, my disciplines will not allow me to chase that move, even with a supportive DMI. I just can't do it. So I just really feel like if you're long Adobe, you need to be really tightening your stops, protect those gains that you've had, and we can still stay in a very bullish pattern, but come back down towards that 10-day moving average and even potentially fill that gap. So I can't like that one, but I do want to look at this group 1 automotive. You can see Asbury Automotive. So when you're looking at these stocks, if Lowe's is going to break out to the upside and we're saying, hey, we're probably not going to be going out and buying new houses, are we going to be going out and buying new cars? Is the consumer going to tighten up? So I think some of these stocks, O'Reilly, AutoZone, these type of companies, I think make a lot of sense. I do like the fact that we have broken above 240 here and come back and tested it. I like to see that. You look at the DMI, that looks very supportive of a continued move higher here. So let's let that one be our case study tonight. Thank you for bringing that up. I just got so excited today that I forgot to do it. I wanted to get to the Q&A, but let's let that one, as long as it stays above 240. So it's going to be GPI staying above 240, and if it does that, I think we go hit that wave 5 target above 260. I just like the space. I like the story. I like the fact there's other stocks there. I think it's backed up by the Lowe's breakout. So there we go. That's as good as it gets on the DMI for a continued move higher. This is how you want to break above resistance. This actually worked out really well from an educational standpoint. So we got up here, we had resistance. We weren't really above the 10-day moving average that much. We broke, we came down, we tested it. So we're hovering above 240 with a supportive DMI. If we can hold that level, again, I think you see something above 260. So I like that. Sorry about that. Let's move back to the Q&A. Unmute yourself, Zach.
Yeah, I guess that's important, huh?
It's kind of how it plays out, yeah.
Remember that moving forward. So yeah, no, let's try.
You're always talking about to other people about that on Thursday night. All right, what's the next symbol?
Yeah, right. So yeah, no, I was gonna say, let me just fire off these symbols to you so we can get through.
Yeah, I promise I won't go long-winded on the. We'll get to as many as we can.
SoFi.
Oh, I figured that one was coming. I saw the move today. I figured that we we're going to have this one tonight. I so called this one. Look at that. And there's your hammer doji, just too far overbought. And the ADX has moved above 40 here. Technically, we could still move higher. That tells you when the ADX moves above 40 that the strongest part of the move is over. That doesn't mean the entire move is over. That's when the ADX breaks back below 40. So, but the fact that we're so far above this resistance here at 8, and that's where the 10-day moving average is here, perhaps we have more to go to the upside here to around 10 or so, but I don't know that that happens in the next day or two. If it does and you're long this stock, take those gains. I'm just, the doji worries me, and the fact that we're so overbought. Yeah, that was a really nice move, breaking above 8 there.
All right, next up, we're going to go with
I
Tesla.
knew that was going to come today. I had a feeling when I saw it.
We'll go up with Tesla.
You've been watching it, so breaking above that 8 level, I think we talked about before, but I just hate that it did it vertically.
Let's go to Tesla next.
Oh my goodness, are you kidding me?
Surprise, surprise.
13 straight days. It's never done that, by the way, for all of you Tesla bulls. 13 days in a row to the upside, going all the way back to when Ford and GM said they're going to use Tesla charging stations. That put a charge into Tesla. How about that, Zach? You gotta love that. But yeah, a big move here. A 220 was key, breaking above it. I like that it went sideways a couple days and then broke above it. Slight moves to the upside, so it counts as the 13 straight days to the upside. But in its history, can you imagine with the moves that we've had in Tesla over time? It's never done that before, 13 days in a row. The DMI still looks really good. It is above 40, so same scenario here. Strongest part of the move is over. Doesn't mean the entire move is over, but that means you got to be, okay, let's be a little bit tighter on our stops. And then that wave 5 forecast up there, above 280 there. And then we're starting to get to all-time highs here in Tesla, which happens to be at the upper end of that. So we could move a little higher from here. How many, at some point in time is going to have a down day. Do we just come down to 240 and fill that gap? If you're looking for an entry on this, that would be something that you would like to see. Let us come back down to 240, close that gap, keep the DMI strong, and then maybe we have a little bit more here. I just couldn't chase it right now, and I might miss that move. I missed them before, but it's the lessons that you learn over time keep you from chasing extended moves. So it could easily run to 280 without stopping. Granted, I'm willing to admit that I couldn't chase it right now. I would love to see you get a break back, test 240, fill that gap, and then bounce. And then I think you have a great move from 240 to 280 at that point in time. But I think Tesla sees 280 at some point. Is it sooner rather than later? I don't know. 13 days in a row. Pretty amazing stuff.
Next stopped up is the best one in the market at the moment.
Oh, you get NVIDIA?
Yes.
Yeah. Just really impressive. It gapped up, consolidated it for 2 weeks, and then we're breaking back to the upside here. You got to be a little concerned about the ADX above the positive directional indicator, but the ADX hasn't broken below 40, and now the positive directional indicator is trying to get back above the ADX, which is a bullish sign if it does that. And I think that 500 level is in play for NVIDIA. But for me personally, I need to see it break above the wave 3 first. So for me to go long at this point, I would want to see a break above 420 with follow through. If it does that and that positive directional indicator gets back above the ADX, I think there's your run to 500. You have to be impressed with this consolidation here. That's exactly what you want. That's what you want to see after this big gap up on earnings. But it's going to bump its head a little bit here at that previous wave 3. So let's let it get above there, and then we can step in.
All righty, we got a question here from Julie, and it's a well thought out question, and I think there might be some others that would be interested in the answer. So Julie, I just wanted to encourage you to send that question in to support support@ewotrader.com, and we'll make sure it gets through to Rob. Just for time purposes in this session, I think that would probably be the best method, and Rob will be able to provide a very detailed email. So yeah, just save the question here and send that in. We'll make sure that's answered. So The next one we're going to go with would be Costco.
You would have to think, wouldn't you, that if the consumer is going to tighten their belt over the summer, that this would be a place to be, and it appears that others feel that way as well. This move here that's exactly what you want to see. This 45-degree angle, but we're at a major point of resistance here at 520. But look at this. You can see how the DMI is setting up. The positive directional indicator is breaking up. The negative is breaking down. The ADX is breaking up, but it's got to get above 20. So watch this. Keep an eye on this, though. This is a really good one to look at. If it can break above 520 and that ADX break above 20, then you have another leg to the upside here. So Costco, definitely one to keep an eye on for a potential long, just not yet.
All right, FCX Copper Play from Darren.
I figured the metals were going to come up, and I really feel like we don't have time to get into a long-winded currency conversation and bond market stuff, but I do think that the metals are about to get a bid. And you can see what happened here with FCX. I hate the gap up. I just wish it wouldn't do that, but it's still in a wave 5 to the downside. Based on I talked to a lot of people that are very knowledgeable in the bond market, in the currency markets, with the stuff that's setting up. This stuff has to play out over a number of weeks, but I think we're getting to a point where we're going to see a bid in the metals. We have an alert on SLV. I think the time is coming there. Look at this break on the two directional indicators, but that ADX has got to get above 20 and above the negative directional indicator. That's a really impressive move. It would indicate, and I think this is probably going to be the long-winded thing, that this 5-wave pattern gets disqualified. I wish it wouldn't have gapped up today, but let's keep an eye on that DMI and see if that plays out over the next several days. Please ask about that one again next week for whoever asked that question, because I think this is a place you want to look moving forward. Not yet, but I think the way things are setting up from everything I've heard from some really knowledgeable friends, you're going to see a bid in the metals here in the not too distant future.
Very well. Thanks, Rob. So I see we're a minute after the hour. Per usual, you tell me how long we're going.
Let's do two more in celebration of our C wave hitting the exact price forecast.
I like that, and I think everyone else is in favor of that as well. Let's go with Ford.
Ford, symbol F. We looked at that. I think we looked at that in the live. By the way, if you're not aware, we do a live Q&A on Fridays on the Hub Financial channel. So if you haven't visited it on YouTube, go to the Hub Financial channel, subscribe there, and we do a live Q&A every Friday afternoon. And Ford was asked this past Friday, and the comment we talked about was this level here. I kind of thought 14 may be a little bit of resistance. We broke above it today. I'm a little concerned about the fact that we're a bit overbought, but we had a doji yesterday and it broke above it today. We're a little overbought from that 10-day moving average. I would want to see that consolidate a bit, but man, is that not a good looking DMI. So I do think Ford goes higher. Give it, if it doesn't in the next day or two, be patient with that. That's just too good of a setup on the DMI. I think Ford does need to go higher, but I'm not too sure on the next day or two.
Very well. All right. Thanks, Rob. So the last question for this evening will be from Jordan. Can we please look at SMG, Scott's Miracle Grow? Looks as price is consolidating in a descending wedge. The ADX is almost at 20.
Somebody's been paying attention for a while. And so the descending triangle in this area, I think with this DMI setting up here would imply downside breakout, and maybe it does. But I can tell you, please don't get directional on these triangles. When you see a triangle, and this is the good spot on this one, because I do think this is one that you could take a look at because of the fact that this is the analogy that you look where the stock is. The stock is at a doji right on support. and the ADX has moved up from a very low level just above 10. And I use the analogy a lot, so this gives me a chance to bring that one up too, of a volcano with the lava bubbling underneath. It looks very calm at top, but we don't know what's going on underneath. When that ADX starts to move up before a triangle breaks out, I feel like that's the same thing. Something's getting ready to happen. We don't know what. You know, from a volcano standpoint, same thing here with these triangles. This could easily break to the downside. A good spot on this one, whoever asked this question, because I think you've got plenty of room to the upside if it breaks higher. If it does break lower, the support is all the way down at 45. So we're setting up for a big move one direction or the other. Please don't pick a direction off that DMI. But know that that ADX rising is telling you something is likely getting ready to happen. But that could be a big move higher or a big move to the downside. I like that one for a strangle on a potential move. Good spot there. You know, maybe it breaks lower and you say, well, gee, if I just would have bought puts, I would have made more. Granted, but please know we showed it tonight that descending triangles can break higher as well. Thanks, everybody, for being with us tonight. Again, thanks for your comments. And I look for another market update here on the EWO channel this weekend. And let's see what happens with the Fed meeting tomorrow. Does that change the narrative of where we've been with these AI stocks, or do we have a little bit more room to run? So look forward to seeing you again next week. Enjoy the rest of your week.